PSC conducted by the Alumni Association, Department of Commerce. Today, we have with us Dr. Biju AV, the Assistant Professor, Department of Commerce, University of Kerala. He'll be handling the session on financial markets and services and investment management. Over to you, sir.
Okay. Good evening to all. Thanks for the introduction given by Bhagavati. I hope I am audible right now.
Yes, sir.
Okay. So, വളരെ ക്രൂഷ്യൽ ആയിട്ടുള്ള ദിവസങ്ങളിലൂടെയാണ് PSC എക്സാമിനേഷൻ എഴുതാൻ ഉള്ളവർ പോകുന്നതെന്ന് മനസ്സിലായി. ഞാനൊക്കെ തന്നെ ഇതേ ഒരു ടൈമിലൂടെ കടന്നുപോയ ആൾക്കാരാണ്. അപ്പോൾ നിങ്ങളുടെ മൈൻഡ് സെറ്റ് എന്താണെന്ന് എനിക്കും വ്യക്തമായി അറിയാൻ പറ്റും. നമ്മൾ ഓരോ ടൈമും നമ്മൾ പഠിക്കും തോറും നമ്മളുടെ ചാൻസസ് കൂടിക്കൊണ്ടിരിക്കുന്ന ഒരു സിറ്റുവേഷനാണ്. അപ്പോൾ ആ ഒരു സിറ്റുവേഷനിലാണ് നിങ്ങളെല്ലാം എന്ന് ഞാൻ വിചാരിക്കുന്നു. ഇപ്പം ഞാനിവിടെ ഇന്നത്തെ ഒരു സെക്ഷനിൽ ഡീൽ ചെയ്യുന്നത് ഇന്ത്യൻ ഫൈനാൻഷ്യൽ മാർക്കറ്റും ഇൻവെസ്റ്റ്മെന്റ് മാനേജ്മെന്റും ആണ്. അപ്പോൾ ഇൻവെസ്റ്റ്മെന്റ് മാനേജ്മെന്റിൽ ഉള്ള ഒന്ന് രണ്ട് മോഡ്യൂൾസ് വളരെ സിമ്പിൾ ആണ്. ഫിനാൻഷ്യൽ ലിറ്ററസി, അങ്ങനെയുള്ള ഫിനാൻഷ്യൽ അവന്യൂസ്. അപ്പോൾ അത് ഞാൻ നോക്കുന്നില്ല. എല്ലാ കണ്ടന്റ്സും കൂടി എനിക്ക് ഈ 1.5 hours തീർക്കാൻ പറ്റുമെന്ന് അറിയത്തില്ല. സോ ഐ വിൽ ട്രൈ ഫോർ ലെവൽ ബെസ്റ്റ്. എനിക്ക് ഒരു കാര്യം പറയാനുള്ളത്, ഇപ്പൊ നമ്മുടെ ക്വസ്റ്റ്യൻ പേപ്പറിൽ വരുന്ന ക്വസ്റ്റ്യൻ പാറ്റേണെ പറ്റിയിട്ടാണ്. അപ്പോൾ ഈ ക്വസ്റ്റ്യൻ പേപ്പറിൽ റിമെമ്പർ കാറ്റഗറി ക്വസ്റ്റ്യൻസ് ഉണ്ടാവാം, അണ്ടർസ്റ്റാൻഡിങ് ലെവൽ ഉണ്ടാവാം, സംടൈംസ് ആപ്ലിക്കേഷൻ ലെവൽ ഉണ്ടാവാം, സംടൈംസ് അനലൈസ് ലെവൽ ഉണ്ടാവാം, അനാലിറ്റിക്കൽ ക്വസ്റ്റ്യൻസ് ഉണ്ടാവാം. അപ്പോൾ ഇറ്റ്സ് ഡിപ്പെൻഡ്സ് ഓൺ ദ ക്വസ്റ്റ്യൻ പേപ്പർ സെക്ടർ. So some question paper sector always means they are asking only remember category questions. What are, explain, just remember. You can just understand. I mean, കാണാതെ പഠിച്ച് എഴുതാൻ പറ്റുന്ന തരത്തിലുള്ള ക്വസ്റ്റ്യൻസ് ആയിരിക്കാം. ബട്ട് സം ക്വസ്റ്റ്യൻ പേപ്പർ സെക്ടർ means it's according to the Bloom's taxonomy. So it should PSC തന്നെ ചിലപ്പോൾ പറഞ്ഞിട്ടുണ്ടാവും ഡിഫിക്കൽട്ടി ലെവൽ നോക്കണമെന്നുള്ളത്. So some questions may be more than 40% questions coming from understanding level. So understanding level questions എത്രത്തോളം പെർഫോം ചെയ്യും എന്നതിനെ അടിസ്ഥാനമാക്കിയിട്ടായിരിക്കും റാങ്ക് ഡിറ്റർമിൻ ചെയ്യുന്നത്. ഇപ്പം നിങ്ങളുടെ ഈ ആൻസർ ഷീറ്റ് എല്ലാം തന്നെ ഇപ്പോൾ കോടതിയും കേസും ഒക്കെ ഉള്ളതുകൊണ്ട് തന്നെ നിങ്ങൾക്ക് സോഫ്റ്റ് കോപ്പി PSC സൂക്ഷിച്ചു വെക്കും. ദെൻ യു ക്യാൻ അപ്ലൈ ഫോർ ദ സ്ക്രൂട്ടണി ആഫ്റ്റർ ദ എക്സാമിനേഷൻ. You have any conflict of marks? Okay, so what I'm trying is subject knowledge, content knowledge, concept knowledge വ്യക്തമായിട്ടുള്ള ആളിന് മാത്രമേ കൂടുതൽ മാർക്ക് സ്കോർ ചെയ്യാൻ പറ്റത്തുള്ളൂ. ജസ്റ്റ് ഒരു റിമെമ്പർ കാറ്റഗറിയിൽ പഠിക്കുന്ന ആളിന് ദേ ആർ നോട്ട് ഏബിൾ ടു പെർഫോം ഇൻ ദ എക്സാമിനേഷൻ. ദാറ്റ്സ് മൈ ഐഡിയോളജി. സെയിം ലൈക്ക് സിവിൽ സർവീസ് ഒക്കെ നിങ്ങൾ പ്രിപ്പയർ ചെയ്യുന്ന പോലെ കുറച്ചും കൂടി കോൺസെപ്റ്റ് അണ്ടർസ്റ്റാൻഡ് ചെയ്യുന്ന ആളിന് വ്യക്തമായി മാർക്ക് മേടിക്കാൻ പറ്റും. അപ്പോൾ ഓരോ സബ്ജക്റ്റും നിങ്ങൾ ഡീപ്പ് അണ്ടർസ്റ്റാൻഡിങ് ലെവലിലോട്ട് പോയാൽ മാത്രമേ നിങ്ങൾക്ക് ചോദിക്കുന്ന ക്വസ്റ്റ്യൻസിന് ആൻസർ ചെയ്യാൻ പറ്റത്തുള്ളൂ. ഞാൻ പറയുന്നു അത് പ്രൊവൈഡഡ് ഈ പറയുന്ന അണ്ടർസ്റ്റാൻഡിങ് ലെവലിലെ ക്വസ്റ്റ്യൻസ് ചോദിക്കുകയാണെങ്കിൽ. സോ ഐ ഹോപ്പ് PSC have given instructions for asking of understanding level questions and analytical and application level questions. Okay. So I can show you some understanding level questions just before my section. My screen is visible or not?
It is visible, sir. Visible.
Okay. So one question. There is a objective, course outcome. Identify the trends and patterns of shares and stock market indexes. It's coming from the topic is from Indian financial market. How does the stock market trading take place? So these kind of questions. How does the stock market trading take place? So usually നമ്മൾ ബുക്കിന്റെ കണ്ടന്റ് പഠിക്കുന്ന ആളിന് ഇത് ആൻസർ ചെയ്യാൻ ബുദ്ധിമുട്ടായിരിക്കും. Then how does the stock price change in the stock exchanges? How do you invest in the stock market? How are stock prices determined? How does the stock prices determined? So there is a clear-cut answer on that. ഇപ്പോൾ നിങ്ങൾ ചോദിക്കും ഇതിനെല്ലാം ആൻസർ കീയിൽ ഇതിനെല്ലാം പ്രോപ്പറായിട്ട് ആൻസേഴ്സ് ഉണ്ടാവും. What does each axis of stock chart represent? What do words like high, open, low, market? So ഒരു സ്റ്റോക്ക് ചാർട്ട് വരച്ചിട്ട് അതിന്റെ ഓപ്പൺ ഹൈ പൊസിഷൻസ് ഒക്കെ വരയ്ക്കാൻ പറയാം. What is the right time to exit from a stock? What is the right time to exit from a stock? Then what are the assumptions behind valuation of stocks in the stock exchanges? The price is what you pay and the value is what you get. Differentiate the price and value of a stock. So this type of questions may be asked. How do you determine the trend in a stock? How do you understand the stock trends? So these questions are part of understanding level questions. അപ്പോൾ ഈ ക്വസ്റ്റ്യൻസ് പെർഫോം ചെയ്യുന്നതായിരിക്കും നിങ്ങൾ റാങ്ക് ഡിറ്റർമിൻ ചെയ്യണം. അല്ലാതെ ഈ എക്സ്പ്ലെയിൻ എന്നുള്ള ക്വസ്റ്റ്യൻസിന് പുറമെ ഇങ്ങനെയുള്ള ക്വസ്റ്റ്യൻസ് വന്നു കഴിഞ്ഞാൽ ദീസ് ക്വസ്റ്റ്യൻസ് ആർ വെരി ഇമ്പോർട്ടൻറ്റ്. ഈ പറയുന്ന എക്സ്പ്ലെയിൻ അതെല്ലാം തന്നെ മെജോറിറ്റി ആൾക്കാർക്കും എഴുതാൻ പറ്റും. ഈവൻ ഒരു പ്രിപ്പറേഷനും ഇല്ലാത്ത ആളിന് പോലും ആ ക്വസ്റ്റ്യൻസ് ആൻസർ ചെയ്യാൻ പറ്റും. ബട്ട് ഇങ്ങനെയുള്ള ക്വസ്റ്റ്യൻസ് വന്നു കഴിഞ്ഞാൽ അതിന് സബ്ജക്ട് നോളജ് കണ്ടന്റ് നോളജ് ഉള്ള ആളിന് മാത്രമേ ആൻസർ ചെയ്യാൻ പറ്റുള്ളൂ. How can a company increase earning per share? What are the ratios applied for estimating worth of companies? Market capitalization is the total value of the company. Explain. The PE ratio of a company never becomes negative. Why? So I have made a sample questions. So this type of questions may be asked. Just ഞാനൊരു എക്സാമ്പിൾ ആയിട്ട് പറഞ്ഞതാണ്. Okay. So I can start my presentation. എൻ്റെ പ്രസന്റേഷൻ രണ്ട് പോർഷൻ ആയിട്ടാണ്. ഒന്ന് ഞാൻ ഇൻവെസ്റ്റ്മെന്റ് മാനേജ്മെന്റ് ഡീൽ ചെയ്യും. അതിനകത്ത് മെയിൻലി ബിഹേവിയറൽ ഫൈനാൻസ് ആയിരിക്കും ഡീൽ ചെയ്യുന്ന. ഫസ്റ്റ് ആയിട്ട് ഫിനാൻഷ്യൽ മാർക്കറ്റ് ആൻഡ് സർവീസസ്. ഇപ്പോൾ രണ്ട് പാർട്ടായിട്ട് ഡിവൈഡ് ചെയ്തിട്ടുണ്ട്. രണ്ട് പോർഷന്റെ കണ്ടന്റ് ഞാൻ വളരെ സ്പീഡിൽ പറയാൻ വേണ്ടിയിട്ട് ട്രൈ ചെയ്യും. My screen is visible or not? Okay.
It's visible, sir. Visible.
Okay. So this is a concept map of Indian financial system. So this map will be helpful for you to understand Indian financial system. So Indian financial system consists of four elements, four components: financial institutions, ഫിനാൻഷ്യൽ മാർക്കറ്റ്സ്. അതിൽ ഫിനാൻഷ്യൽ മാർക്കറ്റ്സ് ആണ് നമുക്ക് കൂടുതൽ ഇമ്പോർട്ടൻസ് കൊടുക്കേണ്ടത്. ഫിനാൻഷ്യൽ മാർക്കറ്റ്. പിന്നെ ഫിനാൻഷ്യൽ സിസ്റ്റത്തിനെ നാലായിട്ട് ഡിവൈഡ് ചെയ്യുന്നു. ഫിനാൻഷ്യൽ ഇൻസ്റ്റിറ്റ്യൂഷൻസ് ഉണ്ട്, ഫിനാൻഷ്യൽ ഇൻസ്ട്രുമെന്റ്സ് ഉണ്ട്, ഫിനാൻഷ്യൽ ഇന്റർമീഡിയറീസ് ആൻഡ് ഫിനാൻഷ്യൽ മാർക്കറ്റ്സ്. Then financial markets facilitate long-term investing, long-term capital formation, short-term borrowing, short-term lending, price determination. Price determination is a very important function of financial market. If the financial market is not there, we cannot identify the price of securities. Then risk sharing, liquidity. Then Indian financial markets include Indian capital market and Indian money market. Indian capital market consists of primary market, secondary market, and derivative market. All these markets are regulated by Securities Exchange Board of India. And primary market having instruments including equity, debt, and preference. Secondary equity market consist of instruments which are equity, preference, and debt. The same instruments. And derivative market have two instruments only, futures and options. You know, you understand that the forwards and swaps are not permitted in the stock exchanges, not yet. So only futures and options are permitted to be traded in the derivative market segment. Then Indian money markets operated by business, government-backed companies, banks, mutual funds. There are instruments such as call money, commercial paper, treasury bills, certificate of deposits, term money. And Indian money market is regulated by RBI and SEBI. The major regulator is Reserve Bank of India. Okay. So this is a concept map. This map I can explain in detail in the coming slide. Okay. So Indian financial system, Indian financial market, different types of market, primary, secondary, derivative, and instruments, money market, and institutions operating money market, and the instruments of money market, and regulators. These are the entire things in the Indian financial system. So the contents, I think you all have some idea about the Indian financial market already. So I can continue faster and keep on. Introduction to Indian financial system, primary market, financial market, security market, money market, foreign exchange market, commodity derivative market, insurance market, corporate actions, financial statements, time value of money, regulators and regulatory framework. So introduction to financial system. So financial system allows transfer of money between savers and borrowers. I will show the diagram of flow of funds. There are direct finance and indirect finance. Direct finance is coming from the lenders and savers to the financial market, and from the financial market, the funds are borrowed by the business firms, government, and this is a direct finance. And there is an indirect finance also. Indirect finance is deals through financial intermediaries. So financial intermediaries, we will look financial intermediaries in detail. And direct finance and indirect finance, already the diagram explained direct finance, directly invested in the capital market or money market. Indirect finance means indirectly, that means through financial intermediaries, the investors investing their money. So these are components of financial system. Financial system combines financial institutions, financial market. I have already explained in the concept map. Financial institutions, financial market, financial instruments, financial services. And financial institutions covers regulators, intermediaries, non-intermediaries. And financial markets, organized and unorganized market. Financial market consists of organized market and unorganized market. We will look in detail in the later slides. Financial instruments, long-term, medium-term, and short-term. Intermediaries also we will discuss. And there is a regulator is also very important. Otherwise, without the regulators, the financial market is collapsed. So the regulator, the SEBI is, the main regulator, SEBI has been called as watchdog in the Indian capital market and money market. Then classification of financial institutions. There are banking and non-banking financial institutions, term finance institutions, specialized financial institutions like Exim Bank, NABARD, term financial institution consists of IDBA and Small Industries Development Bank of India. Then investment institutions like UTI, LIC, and General Insurance Corporation. Intermediaries, there are credit rating agencies, merchant banks, etc. These are the institutions working in Indian financial system. Then financial market, primary, secondary, we will look details in the later side. Organized, unorganized, and over-the-counter exchange. You know, there is an OTC. OTC transactions are in the financial market, like forward and swap. Foreign exchange transactions are done through over-the-counter mode. So that also parallelly done along with the exchange transactions. So what is a financial instrument? A financial instrument is a claim against a person or an institution for payment at a future date of the sum of money or periodic payment in the form of interest or dividend. It represents shares or debentures or preference shares or bonds. It's a claim against, the definition you can look in the books. I don't want to explain further. Financial instrument. So these financial instruments are the financial engineering product. Every day by day, new financial instruments coming up in the financial system. So the investors have to identify the pros and cons of each financial instruments before investment. There is a decline. There is a statement in the mutual fund. The mutual funds are subject to market risk. So same like the people should be very conscious about investment in financial instruments. Some financial instruments are very risky. Financial services, I can skip this slide. Some slides I can skip. Major categories of financial service: fund intermediation, payment mechanism, provision of liquidity, risk management, financial engineering. Okay. So these are the financial intermediaries, which is very important. Financial intermediaries consist of credit rating agencies, merchant banking, portfolio management, depositories, custodials, and issuing guarantees. So these are the financial intermediaries. These intermediaries have a very important role in the financial system. So these are the pivotal agencies for the connection of investors and the borrowers in the financial market. So regulators, of course, I already explained there is two regulators in the financial market. SEBI is the main regulator and Reserve Bank of India is another regulator. So primary market, a market for fresh capital. It provides the channels for sales of new securities. The main instruments of primary market consist of shares and debentures. Okay. In money market consists of treasury bills and all, but we individual people are not able to enter into the money market. Only institutions are entered into the money market. The different kinds of issues, very important issues: public issue, right issue, bonus issue, and private placements. These are the four categorization of issues. And public issue, initial public offer and further public offer. Initial public offer also subclassified into fresh issue offer for sale. And further public offer also classified into fresh issue offer for sale. I will explain in detail. Then the private placement, preferential issue, and qualified institutional placement. So public issue is very important. IPO and FPO. There is a difference between IPO and FPO. IPO means an unlisted company makes either a fresh issue of securities or an offer for sale of its existing securities. So you should be clear that unlisted company makes either a fresh issue of securities Unlisted, there is a problem with, there is an, so just for wait 1 minute, there is an announcement. My house near is temple. So we can continue. Initial public offer. Initial public offer is when an unlisted company makes either a fresh issue. The company is not at listed. ലിസ്റ്റ് ചെയ്യാത്ത ഒരു കമ്പനി ഇഷ്യൂ ചെയ്യുന്നതിനാണ് നമ്മൾ ഇനിഷ്യൽ പബ്ലിക് ഓഫർ എന്ന് പറയുന്നത്. ആ ഈ IPO ചെയ്ത ശേഷമാണ് പിന്നെ അവർ സ്റ്റോക്ക് എക്സ്ചേഞ്ചിൽ ലിസ്റ്റ് ചെയ്യുന്നത്. ബട്ട് ഫർദർ പബ്ലിക് ഓഫർ മീൻസ് ഓൾറെഡി ലിസ്റ്റഡ് കമ്പനി മേക്ക് ഐദർ ഇഷ്യൂ ഓഫ് സെക്യൂരിറ്റീസ് ടു ദ പബ്ലിക്. നിലവിൽ നേരത്തെ ലിസ്റ്റ് ചെയ്തു, നേരത്തെ IPO കഴിഞ്ഞു, അവർ ലിസ്റ്റ് ചെയ്തു, അതിനുശേഷം അവർ പിന്നെയും ഇൻവെസ്റ്റേഴ്സിൽ നിന്ന് ഫണ്ട് കളക്ട് ചെയ്യാൻ വേണ്ടിയിട്ട് ഇഷ്യൂ ചെയ്യുന്നതിനാണ് ഫർദർ പബ്ലിക് ഓഫർ എന്ന് പറയുന്നത്. അപ്പൊ ഇനിഷ്യൽ പബ്ലിക് ഓഫറും അവർക്ക് വേണമെങ്കിൽ പ്രൈവറ്റ് പ്ലേസ്മെന്റ് ചെയ്യാം, അല്ലെങ്കിൽ അവർക്ക് പബ്ലിക് ഇഷ്യൂ ചെയ്യാം. അതുപോലെ ഫർദർ പബ്ലിക് ഓഫർ പ്രൈവറ്റ് പ്ലേസ്മെന്റ് ചെയ്യാം, അല്ലെങ്കിൽ അവർക്ക് ഇറ്റ് ഡിപ്പെൻഡ്സ് ഓൺ ദെയർ ഡിസിഷൻ ടു give their shares. അവർക്ക് പ്രൈവറ്റ് പ്ലേസ്മെന്റ് ഓർ പബ്ലിക് ഇഷ്യൂ. അപ്പോൾ you should be able to demarcate IPO and FPO. Simple difference: IPO means unlisted company, FPO means already listed company. Right issue, it's issue shares to the existing shareholders. Bonus issue, issue of securities to existing shareholders, free of cost. But right issue is not free. Private placement, it's a separate section provision for the private placement, but there is a restriction given by the SEBI, and the person does not exceed 49, and which is neither a right issue or nor a public issue. It is private placement means shares issued to friends and families simply. അത് നമുക്ക് ഇഷ്ടപ്പെട്ട ആൾക്കാർക്ക് ഷെയർ കൊടുക്കുന്നതാണ് പ്രൈവറ്റ് പ്ലേസ്മെന്റ്. മേ ബി അത് ക്വാളിഫൈഡ് ഇൻസ്റ്റിറ്റ്യൂഷണൽ പ്ലേസ്മെന്റ് ആവാം, അല്ലെങ്കിൽ പ്രിഫറൻഷ്യൽ അലോട്ട്മെന്റ് ആവാം. ക്വാളിഫൈഡ് ഇൻസ്റ്റിറ്റ്യൂഷണൽ പ്ലേസ്മെന്റ് ആണെങ്കിൽ അത് അവിടെ 5-6 ഇൻസ്റ്റിറ്റ്യൂഷന് നമ്മൾ ഡിവൈഡ് ചെയ്ത് കൊടുക്കും ബേസ്ഡ് ഓൺ ദെയർ പ്രൈസ് ഓഫർ ബൈ ദം. Then SEBI's regulations, issue of capital to public by Indian companies are governed by the issue of capital and disclosure requirements. It's very important regulation by the SEBI. So these regulations are the base for the issue of shares, either IPO or FPO, which is based on the SEBI's ICDR regulations 2009. There are detailed regulations. You can study detailed in the books, and in the net also it is available. Then pricing in public issues, price, how the price is determined. നിങ്ങൾ അക്കൗണ്ടൻസിയിൽ പഠിച്ചിട്ടുണ്ട്, ഷെയർ ആപ്ലിക്കേഷൻ, ഷെയർ അലോട്ട്മെന്റ്, ഷെയർ ഫസ്റ്റ് കോൾ, ഷെയർ സെക്കൻഡ് കോൾ. ആ സാധനമൊന്നും ഇപ്പം നിലവിലില്ല, അതെല്ലാം പോയി. പിന്നെ നമ്മൾ അക്കൗണ്ടൻസിയിൽ അത് തന്നെ പഠിപ്പിച്ചുകൊണ്ടിരിക്കുകയാണ്. ദാറ്റ്സ് എ പ്രോബ്ലം വിത്ത് ദ കരിക്കുലം. സോ ഇപ്പോൾ നമ്മൾ ഷെയർ ഇഷ്യൂ ചെയ്യണ ദ ലീഡ് മെർച്ചന്റ് is a person who determine the price of IPO. Sometimes the company go for the book building process. In majority cases, book building process is the system in which the company discover the price of new issue. The book building is the main process. Sometimes the lead merchant banker also can determine the price of new issue. Book building process നിങ്ങൾക്ക് അറിയാം അതിനകത്ത് പ്രൈസ് ബാൻഡ് ഉണ്ട് ആ പ്രൈസ് ബാൻഡിനകത്തുള്ള പ്രൈസ് നമുക്ക് പറയാൻ പറ്റും അതിനുശേഷം the merchant banker, the lead merchant banker will determine at what price the company can issue new shares. Book building is a process of price discovery. So you already on a book building process. Then the role of the lead merchant banker. The lead merchant banker is a financial intermediary and plays a very important role in the issue of shares. And he only exercises the due diligence and satisfies the disclosure requirement as per the regulations of Securities Exchange Board of India. And the company always have a memorandum of understanding with the merchant banker before the issue. The company is not involved in the issue. The entire things done by the lead merchant banker. And he is appointing the underwriters, bankers, brokers, etc. So these are the intermediaries involved in the issue process. Merchant banker, registrars, bankers to the issue, underwriters. So you can go detail with the help of books because the lack of time I'm skipping the slides. So these are the very important persons involved in the issue process. This is very important. International depository receipt. 3 international depository receipt you at least you need to learn. International depository receipt consists of 3 depository receipts: ADR, GDR, and IDR. ADR means when a company lists their shares in an American stock exchange. So that with the help of a bank and the shares of Indian company, if the Indian company goes for the ADR, the Indian company need to be listed in the American stock exchange with the help of a bank, and they are converting the Indian shares corresponding with the American depository receipts. Similar case, if a company listed in London or Luxembourg or Frankfurt stock exchanges, the instrument is called as GDR. GDR, the Europe, somewhere in the Europe they are listed. Recently, Kerala government in the bond, London stock exchange listed. That is Euro commercial bonds ആണ്. The shares അല്ല. Shares list ചെയ്യുമ്പോഴാണ് അവിടെ GDR വരുന്നത്. American stock exchange list ചെയ്ത ADR. ഒരു American company Indian stock market വന്ന് ലിസ്റ്റ് ചെയ്താൽ അവിടെ Indian depository receipts. So 3 international depository receipts, Indian depository receipts, American depository receipts, and global depository receipts. So you have to understand or differentiate the 3 depository receipts. So Indian depository receipt should be listed in its home country exchange. So these are the foreign capital issuance consist of global depository receipt, American depository receipt, foreign currency convertible bonds, external commercial borrowings. So GDR, ADR, foreign currency convertible bonds. Foreign currency convertible bond is the Masala bond is a good example of foreign currency convertible bonds. And external commercial banks also used by the companies to get foreign capital from the other countries. So GDR already explained to you, the stock exchange which has been listed in outside the country, mainly European stock exchanges. So usually, typically 1 GDR is equal to 10 Indian shares, but any ratio can be used. Typically, we are saying that 1 GDR is equal to 10 shares. Then ADR I already explained. ADR also നിങ്ങൾ detail ആയിട്ട് പഠിച്ചോണം. Then foreign currency convertible bonds, the bonds issued by Indian companies and subscribed by the non-residents. These bonds carry fixed interest and these bonds are convertible into certain number of ordinary shares after a specific period of time. Sometimes the conversion power is not there in the foreign currency convertible bonds. So Indian companies always prefer to issue GDR rather than foreign currency convertible bonds. Why? Because foreign exchange risk is more in the case of foreign currency convertible bonds, because we have to pay interest regularly. So the interest should be given through dollars. The interest money can be given in the form of dollars. So dollars are subject to exchange risk. So the companies are careful when the issue of foreign currency convertible bonds, but they are likely to issue GDR rather than foreign currency convertible bonds. Then external commercial borrowings, commercial loans, foreign currency loans, different types. It contains different types: external assistance, buyer's credit, supplier's credit, NRI deposit. So you can study detail. So sometimes the question may be asked: functions of financial market. What are the functions of financial market? So you can write borrowings and lending is a main function. Borrowing and lending. Price determination is another prominent function of Indian financial market. Information aggregation and coordination also another function. Risk sharing, liquidity, efficiency. These are the functions of Indian financial market. Indian financial market and product. There are 4 markets: security market, money market, foreign exchange market, and commodity market. Security market, you should be careful in this area. Security market, cash market. We always call cash market. Cash market means the market, the spot settlement. The stock market, Indian stock market is a cash market. We say it is cash market, but some people are confused with when people saying the cash market. The stock market is a cash market, but derivative market is not cash market. The stock market is always also called as cash market or equity market. It consists of shares and debentures. Then derivatives, index and stocks, both are trading in derivatives. Options also, index option and stock option. Futures also, index futures and stock futures. And debt market is very important in India. Government securities and corporate bonds. And there is a collective investment vehicles which consist of mutual funds, index funds, and exchange traded funds. These 3 are very important nowadays. Many people are investing in mutual funds, index funds, and exchange traded funds. Some people are very interested to invest in gold ETFs. Some people are very interested to invest in Nifty ETFs, means exchange traded funds. So these are the security market structure. Money market, you know, the market which is less than 1 year, short-term debt financing and investment. And there is a foreign exchange market. The foreign exchange market is largest in the world. Very, very wide, big foreign exchange market in India. And commodity market, which consists of agricultural commodities and non-agricultural commodities. There are many commodity market in India as well as in the world. Chicago Mercantile Exchange, Tokyo Commodity Exchange are the world's most popular commodity markets. Then insurance market, which consists of life and non-life insurance market, which is been part of Indian financial market. Securities market in India, which consists of shares, debentures, stocks. Functions of security market. It's also very important. What are the functions of security market? Mobilization of savings and acceleration of capital formation, promotion of industrial growth, rising long-term capital, ready and continuous market, proper channelization of funds, provision of variety of services. So primary market already explained, secondary market. You know, the settlement cycle, settlement period you definitely need to understand. For the stock, the settlement time is T+2, and derivatives it is T+1, And foreign exchange, it is T plus 2, but foreign exchange for pairs like dollar and Canadian dollar is T plus 1, except all others are T plus 2. So T plus 1 for derivatives, T plus 2 for cash market, means stock market, and T plus 2 for foreign exchange, but the pair of dollar and Canadian dollar, it's T plus 1. T means trade day plus 1 day. Then market participants, investors, issuers, intermediaries, and regulators. These are the market participants. So I can skip this slide. Then components of securities market, shares, equity shares, right shares, because practically ചെയ്യുന്ന കാര്യങ്ങൾ മാത്രമേ ഇതിനകത്ത് എഴുതിയിട്ടുള്ളൂ, ഇല്ലാത്ത കാര്യങ്ങളൊന്നും എഴുതിയിട്ടില്ല. Means some textbook, it's some ചില text it's not happening in India. So ഉള്ള കാര്യങ്ങൾ മാത്രം നമ്മൾ പഠിക്കാനായിരിക്കും ബെസ്റ്റ്. Equity shares, right issue, right shares, bonus shares, preference shares, cumulative preference shares, cumulative convertible preference shares. Then convertible debentures, non-convertible debentures. When you look in the exchange, identify, you cannot see that the preference shares. Preference shares ഉണ്ടാവണമെന്നില്ല. Preference shares വളരെ സ്പെഷ്യൽ ആയിട്ട് അലോട്ട് ചെയ്യുന്നതാണ്. Preference shares സബ്സ്ക്രൈബ് ചെയ്യണമെങ്കിൽ മിനിമം 20-25 lakhs വേണം. സോ ഇൻസ്റ്റിറ്റ്യൂഷൻസ് ആണ് മെയിൻലി പ്രിഫറൻസ് ഷെയർസ് സബ്സ്ക്രൈബ് ചെയ്യുന്നത്. ഇൻഡിവിജ്വൽസ് പ്രിഫറൻസ് ഷെയർസിന് അലോട്ട്മെന്റ് കിട്ടാറില്ല. Issued by the companies, but as per the provisions of Securities Exchange Board of India. Preference shares. But now theoretically, preference shares, പഠിക്കാറുണ്ട്. Preference shares, they have preferential right to repayment of capital at the time of winding up, and they have the preferential right to get the dividend. So, but in practical, the preference shares are very less in the stock market, secondary market as well as primary market. But preference shares are there. But the people need to invest more. Minimum 20-25 lakhs should be invested for getting the preferential allotment. Derivative market detail at next section. Debt market is important. Debt market is the fulcrum of modern financial system. This sentence is very important. Very debt market is happen in India. Plays very important role in the efficient mobilization, liquidity management, monetary policy. Government in the policies എല്ലാം തന്നെ ഡെറ്റ് മാർക്കറ്റിന് ഫേവറബിൾ ആവുന്ന രീതിയിലാണ് ഗവൺമെന്റ് ചെയ്യുന്നത്. So there are collective investment vehicles. Already I explained mutual funds, exchange traded funds, and index funds. So mutual funds, mutual funds, there are investors, they send their money, and there is a fund manager collect their funds, and this fund manager invests in securities and generate returns. The returns is backed to the investors again. This is a cycle. So the mutual fund is very important for the person who don't know how to invest in the stock market. Simply we can depend on the mutual funds by putting investment in the funds, and they will do professional investment and provide better returns. So there are advantages of mutual funds you can read in the books. Index funds is also very important. Now people don't believe single stocks. So people believe in exchange, Sensex and Nifty performance in recent time. It's very tremendous growth by comparing the other stock exchanges in the other part of the world. Why this is the country's GDP is in a negative trend, but the stock market is increasing upward movement. It's a very, very surprising thing that Indian stock market is going up as compared to other countries. So I don't know what are the factors which influence the stock market for the increase of this kind of way, but still the GDP is in a negative trend. But there is a hope in the investors that the Indian stock market is going up. So the people are interested to invest in the stock market. So the index is a very good thing we can invest, because based on the index is very, very Nifty index is very strong. Sensex is very strong. So index is always increasing, so that the people gaining with the help with their investment in the index. നമ്മൾ ഇൻഡെക്സിൽ ഇട്ട് കഴിഞ്ഞാൽ ഇൻഡെക്സ് റിസ്ക് ഉണ്ട്, സ്റ്റോക്കിന്റെ പെർഫോമൻസ് volatile ആണ്, നമുക്ക് പറയാൻ പറ്റത്തില്ല സ്റ്റോക്ക് എപ്പോൾ കൂടും എപ്പോൾ കുറയുമെന്ന് പറയാൻ പറ്റത്തില്ല. സോ വെരി സേഫ് ടു ഇൻവെസ്റ്റ് ഇൻ ദ ഇൻഡെക്സ്. So that index fund is very relevant nowadays. Then exchange traded fund. Exchange traded funds means again it's there is a difference between exchange traded fund and mutual funds. Very important is the difference is very important. Exchange traded funds are bought and sold throughout the day. You can get any price when the market is open 9:15 and the closing at 3:30. So you can get a price from the morning till evening. Any price you can get based on the spot price. But the mutual funds are bought and sold based on the price at day end. That is a major difference. Balance all remains the same. So mutual funds il thanne index funds undu, but adinte oru divasathe end price ilana adu trade cheyyunnathu. But exchange traded funds aanengil same like shares pole oro time ilum demand and supply factors anusarichu adinte price maarikondirikkum. Means we are trading with the exchange. Nifty 50 aanengil Nifty Bank X, then and sense we can trade any exchange by investing in the exchange traded funds. Gold also you can invest. Gold exchange traded fund is that. So 2007 it was started. Gold in the rate അനുസരിച്ച് അതിന്റെ ഇത് കൂടിക്കൊണ്ടിരിക്കും. So you can buy now gold exchange traded fund in the Google Pay, from the Google Pay. So there are some market indicators, stock market indicators. Sometimes the question may be asked, what are the stock market indicators? Market capitalization. How do you calculate the market capitalization? It's a share price into number of outstanding shares, and turnover computed by multiplying the traded quantity with the traded price. Means the daily turnover we can calculate. The traded quantity of shares multiplied by the traded price, we will get the turnover. Turnover ratio also we can calculate. Somebody asking for my PPT, so I will decide and consult with my department before sharing the PPT. Turnover ratio, liquidity of the market can be gauged by turnover ratio, which equals the total turnover on a country's stock exchange divided by the stock market capitalization. So turnover ratio also we can calculate. Total turnover on a country's stock exchange means രാജ്യത്തുള്ള സ്റ്റോക്ക് എക്സ്ചേഞ്ചുകളിലെ മൊത്തം ടേൺ ഓവർ അങ്ങനെ കാൽക്കുലേറ്റ് ചെയ്യണമെന്ന് ഞാൻ പറഞ്ഞിട്ടുണ്ട്. ടോട്ടൽ ട്രേഡ് ക്വാണ്ടിറ്റി മൾട്ടിപ്ലൈഡ് ബൈ ദി ട്രേഡ് പ്രൈസ്, ടോട്ടൽ ടേൺ ഓവർ ഓൺ എ കൺട്രി സ്റ്റോക്ക് എക്സ്ചേഞ്ച് ഡിവൈഡ് ബൈ ദി സ്റ്റോക്ക് മാർക്കറ്റ് ക്യാപിറ്റലൈസേഷൻ. Then market capitalization ratio is dividing the market capitalization with the GDP of the country. Very important indicator, market capitalization ratio. So there is a stock market is always related with the GDP, but now it's going in the opposite side. GDP is going downward and the market is going upward. So you can identify the factors is very important. The first time in the country it is going in the negative direction, opposite direction. Then traded value ratio, dividing traded value divided by turnover by GDP of the country. Then index movements, very important. Good stock market index captures the behavior of overall equity market. The index is the behavior of overall stock market performance. When the index is going downward, the market performance is weak. When the index is going upward, the stocks are performing better. So should represent the market, should be well diversified and highly liquid. So these are the characteristics of Indian stock market index. Another, demutualization is very important. Everyone should know demutualization. So now the market is demutualized. Demutualized means the trading members are separated from the management of stock exchanges. പണ്ട് സ്റ്റോക്ക് എക്സ്ചേഞ്ചിലെ മാനേജ്മെന്റിനകത്ത് ബോർഡ് ഓഫ് ഡയറക്ടേഴ്സിനകത്ത് ട്രേഡിംഗ് മെമ്പേഴ്സ് ഉണ്ടായിരുന്നു. ഇപ്പൊ ട്രേഡിംഗ് മെമ്പേഴ്സിനെ മാനേജ്മെന്റിൽ നിന്ന് separate ചെയ്തു മാനേജ്മെന്റിൽ ട്രേഡിംഗ് മെമ്പേഴ്സ് ഇല്ല. ട്രേഡിംഗ് മെമ്പേഴ്സ് മീൻസ് ദ ബ്രോക്കേഴ്സ്, ജിയോജിത്, PNB, പാരിബാസ്, Sharecan, Capstock, SBI Caps. They are the trading members. They are being separated from the management of stock exchanges. So this is very important decision of Government of India and SEBI. So after that, the stock market reacted well, and the stock market went up after the decision of demutualization. And the screen-based trading is happening in India. Now the trading is fully automated, screen-based. Settlement cycle already explained. Pande T+5 ആയിരുന്നു, ഇപ്പോൾ T+2, derivative T+1. And risk management is very important. Risk management is very important. SEBI is the regulator for managing the risk. If the company failed to maintain their momentum, they can be removed from the index, removed from the stock exchange. There are regulations by the SEBI for to be included in the stock exchanges for trading purpose. Then investors protection, and there is a PAN is also compulsory as a regulation of regulatory reforms done by the SEBI. So if you have to enter in the stock market, permanent account number is a must. So money market, organized and unorganized. Indian money market is organized as well as unorganized, but Indian capital market is fully organized. Unorganized on the capital market, but money market is still unorganized. There are presence of indigenous bankers, money lenders, non-banking financial intermediaries, so that many kind of scams present in Indian money market rather than Indian capital market. So SEBI is a watchdog in Indian capital market, but SEBI is not a watchdog in Indian money market. So that there are a lot of scandals. You might have heard about the West Bengal chit funds, corruption, or everything which was happened in the money market, not in the capital market. The players in the money market is very important. These are the players in the money market: public sector undertakings, RBI, mutual funds, discount and finance house, banks, corporate investors, non-banking financial companies, state government, provident funds. These are the players of money market. Players are more in Indian money market because there are relaxation over the licensing and regulation part. But in capital market, നമുക്ക് അതിനകത്ത് കയറണമെങ്കിൽ തന്നെ licensing, listing requirements, a lot of regulations, and we need to pay a lot of things to get the license to enter into the capital market. But the money market is somewhat relaxed, so that these kind of players, even licensed and non-licensed, the players are involved in the money market. So role of RBI in the money market, RBI plays very important role in the money market because it deals with the money. So the money market instruments, you can learn the details with the help of books. Call money market, the lend for a day, ഒരു ദിവസത്തേക്ക് വായ്പ കൊടുക്കാം. For a week or a 14 days, maximum 14 days on a call money market. You know, you might have heard about a bank. Shivakumar requesting not it shared content. Money market instruments. Call money market is a very, very liquid instrument. In the call money market, you might have heard about a bank called S Bank. They have played in call money market. So after that, there is a huge amount of loss incurred by the bank, and after that, the bank was collapsed. So it's very, very liquid instrument, call money market. 1 day, 2 days, 3 days, till 14 days, we will get a credit, but the interest rate depends on the negotiation between the agencies. So sometimes the SBI needs finance, SBI can take finance from the ICICI Bank, but the interest rate depends on the negotiation between the banks because it's very liquid. For 1 day or 2 days, they are lending money. The term money market instruments, which is more than 14 days to 1 year, and their base rate is Mumbai Interbank Offer Rate. The MIBOR rate is there. MIBOR rate is a base for the fixing of interest rate in the term money market. Term money market 14 days to 1 year. The interest rate depends on the MIBOR rate. MIBOR rate is always fluctuating. The repo market is also very important in the money market. Repo means repurchase of securities. If a particular institution wanting a finance, and they can sell their securities to an individual or an institution, and after a period of time they can purchase back. And the difference between the forward price also determined. ഏത് പ്രൈസിന് തിരിച്ച് പർച്ചേസ് ചെയ്യുന്നു നേരത്തെ തീരുമാനിച്ച് വെച്ചേക്കും. So അതാണ് repo market. Repo market is very important in the money market. Then collateralized borrowing and lending obligations is also approved by the RBI. Treasury bills. Treasury bills is issued by the government, and it is been recognized by the Reserve Bank of India, and it is been issued to bridge the temporary gap between revenue and capital, and its maturity period of 3 months, 6 months, and 12 months. And the certificate of deposit is issued by the commercial bank, and it is payable at it's issued at a discount and redeemed at maturity, par. Issued at a discount and redeemed at par. It deposit ranging from 3 months to 1 year. The derivatives I can discuss in the next session. Foreign exchange market is kind of the world's largest foreign exchange market, and the base currency is called first currency, and the second currency is called term currency. It's very important, and it's the largest and most liquid financial market in the world. Then participants in foreign exchange markets, there are non-banking companies, commercial banks, central banks, exchange brokers, speculators, all are the participants in foreign exchange market. Then foreign exchange trading settlement, I already explained T+2, but the exception is the US dollar and Canadian dollar, the currency pair which settles T+1. Very important. Then foreign exchange derivatives, we can look on the derivative section. Commodity derivative market is very important. Commodity derivative market, non-agricultural and agricultural commodities. You can learn more from the books. Non-agricultural, what are the non-agricultural commodities traded in the derivative market, and agricultural commodities traded in the derivative market. And commodity derivatives and financial derivatives. Commodity derivatives, it is physical settlement. The financial derivatives is cash settlement. So we can look in the derivative section. Insurance market is there, life and general insurance. These are the insurance intermediaries. Corporate auctions are very important. Corporate actions. Corporate actions, whenever there is a corporate action, an impact will be happen in the market, either increase in the share price or decrease in the share price. So there are a lot of corporate actions in the market. So these are the corporate action. Dividend is the main corporate action. After the dividend declaration, the company's share price may go up usually. Then stock split means existing shares of face value divided into smaller denomination. The 10 face value divided into 5 or 2 or 1. Buyback, sometimes the company buy back existing shares, and right issue, bonus issue. These are the five elements. The 5 corporate actions are present in the market. So these corporate actions are very important weapon by the companies to increase or decrease the share prices. Financial statements, balance sheet, profit and loss account is very important. Okay, these are regulators. So you should understand the regulators: SEBI, RBI, Forward Market Commission, IRDA, and Pension Fund Regulatory Development Authority. SEBI is the regulator for bond market, equity, and derivative market. RBI is also part of bond market, equity, derivative, banking, and fixed income market. Forward Market Commission is a regulator for commodity market. IRDI, Insurance Regulatory Development Authority of India, is a regulator for insurance. PFRDA is a regulator for pension funds. Okay. So SEBI's roles you can read from the books. So this is the first was over, and remaining I can have 40 minutes. So So, financial market അത്രേ ഉള്ളൂ. അത്രയും കാര്യങ്ങൾ ഡീറ്റെയിൽ ആയിട്ട് പഠിക്കുക. ഞാൻ അതിനകത്ത് വിട്ടുപോയത് fund based and fee based services. That also in the syllabus, so you can learn the fund based and fee based services. What are the fund based services and what are the fee based services? Except all of the matters I have covered in my slides, so you can develop further. Then behavioral finance. Behavioral finance is a very important part of investment management in the syllabus. So the majority part of the investment management contains the behavioral finance portions. So behavioral finance is a study of the influence of the behavior of investors or financial analysts. So this is the influence of behavior of investors and financial analysts. It's a new area, emerging area, but very important area. It countered it against the standard financial theories, so-called standard financial theories such as capital asset pricing model, efficient market hypothesis, arbitrage model, single index model, multi-index model. All these models are, the behavioral finance models challenging all these standard financial models. And behavioral financial experts saying that all these models are not practical, or sometimes these models may not work out in a real scenario. So that is the very importance of behavioral finance. The influence of behavior of investors. And there is a study by Michelle Bartley. Personality, moods, emotions play a crucial role in our everyday decision making. നിങ്ങൾ എക്സാം എഴുതുന്ന സമയത്ത് നിങ്ങളെ മൂഡ് വളരെ ഇമ്പോർട്ടൻ്റ് ആയിരിക്കും, നിങ്ങൾ എത്രത്തോളം മാർക്ക് സ്കോർ ചെയ്യുക എന്നുള്ളത്. So you have to create a better mood while writing in the examinations. So the emotions are very important. Otherwise, your handwriting is not good when you are in bad mood. So you have to create a better mood while writing in the examination. So it focuses on the fact that investors are not always rational, have limits to their self-control, and are influenced by their own biases. There are people having biases, or people are addicted to biases. We cannot control the biases in every time. So there is no rationality, or are we really rational? Are we really rational? 24 മണിക്കൂർ നമ്മൾ rational ആണോ? No, nobody is rational in 24 hours or 365 days in a year. So there are some irrationality coming into account in always while we behave with the people or when we do investment. But behavioral finance capturing the effect of irrationality while investment, that will disturb the market. That irrationality will lead for the disturbance of the market, destroying the market sometimes. So that is a rationality. So we are not rational always. That is been evidenced from the studies. The behavior means emotions, personalities, psychology, sociology. These are the behavior, and finance, numbers, equations, statistics, and balance sheet. These are static, but the behavior is not static. So standard economics and finance, market are perfect. The standard theory says that the market are perfect, and the investors are rational, and the investors can assign probability, and based on the probability they can predict in the future. But there is a question: will these decisions reach to reality? Will these decisions reach to reality? What will be the answer? You can say that you can find the life partner. How will you take a partner? Can we able to predict the behavior of that person? You can apply in the real life. So financial theories, are the theories able to predict the human behavior or able to count the people behavior? Are the theories are able to predict the human behavior? It's not possible. Human behavior is very, very flexible. We cannot predict. The theories cannot predict the human behavior. That is an importance of behavioral finance. So this is the outline of my presentation. What is behavioral finance? What is the need of behavioral finance? How do people make decisions under uncertainty? What are the different biases? How can understanding of behavioral finance help people make better decisions? What is the impact of these biases on financial decision-making processes? These are the questions. Some other questions also may ask in the examination. So we can look in the later slides. So nudging is also part of behavioral finance. three behavioral theories are there: expected, utility, prospect, and nudging. The nudging is very, very latest theory in the behavioral finance. So you can expect questions from nudging. So behavioral finance is a combination of finance and psychology. We have to mix up the finance and psychology for better decision making. So there is a quote by Dr. Mayer Stateman, Santa Clara University. People in standard finance are rational, but the people in behavioral finance are normal. All the theories set in the standard finance are based on the assumption that the people are rational or people are economicus. Homo economicus, that means rational. But in reality, people are not rational always. The people, we can say that the people are normal. So behavioral finance filling the gap in standard finance theory says that the people are Homo economicus and they are not Homo sapiens. So the term Homo economicus or economic man is the portrayal of humans as agents who are consistently rational, but it is not practical in always. So behavioral finance is filling the gap which was emerged with the standard finance and normal human beings. So normal people are human Homo sapiens, not Homo economicus. That is says by the behavioral finance. But the standard finance theory, the people are Homo economicus. So there is a conflict between the standard financial theoreticians and behavioral finance theoreticians. So efficient market hypothesis is a very important theory. Some people, some technical analysts and some fundamental analysts is quoting this theory as a foolish theory of capital market. His theory was contributed by Eugene Fama. He got the Nobel Prize for the creation of this model. Efficient market hypothesis, a market which prices always fully reflect available information, is called efficient. So but in practical, we cannot identify a market in which reflect fully available information anywhere in the world. The market is not efficient. So we can say that the market is not efficient, but the farmer says that the market are efficient. An efficient market, the creation of pharma, so that the fundamental analyst and the technical analyst, they won't believe in this theory. If they believe in the theory will be true. They don't have a job in the market. So the efficient market hypothesis criticizing the fundamental analysis and the technical analysis. These two analyses are wrong. That the way efficient market hypothesis has pointed out. So the pharma. There are a lot of anomalies. These anomalies are the pivotal point of behavioral finance. And the pharma divided in the market into three categories: weak form, semi-strong form, and strong form. Weak form, semi-strong form, and strong form. But almost he succeeded about evidencing the semi-strong form and weak form. There are market, the US, for example, the US market, sometimes it is strong form, the hypothesis may be true, and the weak form, the hypothesis may be true, but strong form, unfortunately, he was failed to prove strong form of hypothesis in his model. So criticisms of efficient market hypothesis. So Lakshmi, any problem?
No, sir, no, nothing.
Somebody asking, requesting to annotate the shared content.
No, sir, no, nothing, sir.
Decline. Criticisms of efficient market hypothesis. These are the anomalies. Criticisms. All investors are rational. I already pointed out the investors are not rational. Stock price movements are random. This is another assumption of efficient market hypothesis. Stock price do not follows a pattern. The stock price are random, but it is also not proved stock price are not random and definitely it follows a trend. So all investors are well informed. You know, many people, a person who get PAN can enter into market and trade, and he may not know the things in the market and information in the market. He simply trade. So this assumption is also foolish. Investors are well informed. I think the 90% of the investors are not fully informed, and the 10%, maybe we can say that they are informed. Then the market anomalies, these anomalies of efficient market hypothesis, I already said that the efficient market hypothesis criticizes fundamental and technical analysis, but they said that the fundamental analysis are wrong. We cannot make a profit out of fundamental analysis, and we cannot make a profit out of technical analysis. So that's the way the efficient market hypothesis saying, but this is not possible. We can do profit out of the fundamental analysis. We can identify the intrinsic value of the shares, and we can compare the intrinsic value with the market value, and we can understand whether the stock is overpriced or underpriced, and we can make a decision out of that. So fundamental analysis is another anomaly. Technical anomalies, the efficient market hypothesis says that the market did not follow any kind of trend, is another foolishness. The market, some shares, majority shares following a trend. So is another anomaly. And seasonal anomalies, you know, one day effect, 2 days effect, the market may be crash. So these anomalies not rectified in the efficient market hypothesis. They are called as calendar anomalies, calendar effect. Okay. So these are the crises which cannot be predicted by the standard finance theoreticians. Global financial crisis 2007, Corona effect 2020, the market were crashed after these events. So there are new event studies. So before the event and after the event, what is the impact of stock prices? So there are researchers emerged based on event studies. They are the contributors. These are the contributors: Daniel Kahneman, Amos Tversky, Dan Early, Schaffrin, Werner D. Bondet, Robert J. Schiller, and Richard Thaler. And these are the Nobel laureates of behavioral finance: Richard Thaler, Schiller, Daniel Kahneman, and Smith. They have contributed more in the behavioral finance. They have Nobel Prize 2002, 2013, and 2017. So Daniel Kahneman is the father of behavioral finance. He's known as the father of behavioral finance. And he studied rationality in economics, specialized in cognitive biases and heuristics way of problem solving, which causes individuals to engage in behavior which is both irrational and anticipated. So that is a study of Kahneman. He was known as the father of behavioral finance. And Richard Thaler is another eminent person in behavioral finance who contributed the nudge theory, and his book is called The Nudge. He contributed the concepts of mental accounting, and he combined the psychology and finance. 2017, he got Nobel Prize. And Schaffrin's contribution is heuristic-driven bias. Heuristics is the trial and error method. When suppose you are writing the PSC examination, some questions you are not able to perform well, you understand that time your mental process work, and you will find a solution and how to answer those questions which are very well known to you that time. So that trial and error method sometimes may lead for errors, and sometimes you may be advantaged. This is called heuristic-driven bias. And this heuristics sometimes causes the market issues. The market may be downward because of these heuristic-driven biases. And he contributed inefficient market. He contributed a hypothesis called deficient market hypothesis. A deficient market hypothesis. There are activities such as cornering, rigging, and these things are very common in the market. Even though the SEBI is been there, but some people are manipulate the price of the stocks and sometimes which cannot be identified by the SEBI. And due to these activities, the people may be suffer losses. So that's a study of Schafrin. And Robert J. Schiller, who got Nobel Prize for the contributions of behavioral finance, and his contribution is asset pricing, and he got Nobel Prize 2013. And he said that investors are human beings, process information using shortcuts and emotional filters. So there are two types of behavioral finance: micro behavioral finance and macro behavioral finance. Micro means it examines the behavioral biases, therefore irrational behaviors of individual investors. It examines the behavioral biases of, therefore, irrational behavior of individual investors. So micro behavioral finance concentrating in individual investors, not the market. So this is micro behavioral finance, and this is called the homo economics, the micro behavioral finance challenging the homo economics version of standard financial theory. This is macro behavioral finance. Macro behavioral finance concentrating, I will explain the nudge. Somebody asking what is nudge theory. I will explain the nudge. Macro behavioral finance deals with the entire market, but micro deals with individuals' biases, but the macro means the biases of the market. So there are behavioral influences like market anomalies, bubbles, the volatility which may be high as compared to the previous day. What is the reason for such volatility? Which behavior causes more volatility? Limited arbitrage, etc. Macro behavioral finance. Then there is a question: uses and application of behavioral finance. Sometimes asked, the behavioral finance is used for capital budgeting and investment decisions. So you have studied the capital budgeting techniques like internal rate of return, profitability index, or benefit cost ratio, a net price and value method. But we are not looking on that theories. We are looking on the person who deciding, who using that models, the heuristics of the managers who are using that models for decision making. Sometimes their bias may be affect the effect of the models. So we have to consider the bias of the managers who are taking decisions by using the standard financial theories. So that is a very interesting study. Then dividend policy and decisions, whether the dividend policy is a biased decision or non-biased decision, and asset allocation and trading. So whether we need to participate in the pension plan or not to participate in the pension plan, or how much to contribute, where to allocate asset, how to rebalance allocation. These things can be done with the help of very careful investment. Without means we need to look on these using the rationality. The three theories. First one is expected utility theory. I will explain in detail. Expected utility theory means it posits that investors make those decisions under uncertainty which maximize their expected utility. People deciding based on their what utility they will get. So there are many risk categorization of investors, risk seekers, risk averse investors, and there are risk neutral investors. The utility preference is also different in accordance with the risk perception. So investors making decisions based on the utility level. So prospect theory is follower of an expected utility theory. So prospect theory means the investors perceive more gains rather than they don't want to take risk. So they will try to avoid the risk, but they are interested to get gains only. So expected utility theory, importance to the utility, and the prospect theory means future gains, importance to the future gains. So expected utility means expected utility. It was contributed by Daniel Bernoulli in 18th century. So there is an application of expected utility theory. Just I will give a brief summary of this slide. Insurance market. Insurance, actuaries are there. These actuaries are the people who decide the premium of insurance policies. So when we invest in insurance market, insurance policies, before that we have to consider the premium. So the premium and the claim given by the insurance company are the utilities to the investors. Whether the premium is high, the people are not able to invest in the insurance. So the actuaries are very, very careful about fixing of premiums. So the utility is very important. Insurance policy subscription depends on the utility of the insured. So that utility should be considered by the actuaries. Otherwise, the company's insurance policy will not be sold. So I can skip this slide. There are some mathematics. Then prospect theory. It's also called loss aversion theory. It was contributed by Kahneman and Tversky in 1979. The theory is in contrast of expected utility theory. Expected utility giving emphasis on the utility, but here individuals make decisions based on the perceived gains instead of perceived loss. So always giving preference to the gains in the future. So there are some mathematics means when there is a loss in the future, there is a perception of loss, they won't consider it. That's the slide giving. So the loss aversion is a very important concept of prospect theory. Loss aversion means a tendency where investors are fearful of losses and try to avoid them. For example, it is better not to lose 1,000 than it gained 1 lakh. So the people's behavior is that they don't want to lose 1,000. Even though they will get a gain of 1 lakh or 10,000 in future. They don't want to lose 1,000. So that's their stand. Majority people thinking like that. So that is a loss aversion bias. So the prospect theory based on this bias, loss aversion. So that there are, the market is operating with, by using these loss aversion strategies. People use hedging, people use bonds, people purchase insurance product for avoiding these kind of fears. So fear of loss aversion. So loss aversion is another market opportunity for the financial engineers. So nudges is a very important theory in behavioral finance. Nudges means intervention by the people. But these interventions, we can have freedom to take these interventions or we can avoid those interventions. Suppose I can say that if someone asks you which brand comes to your mind when you want to eat healthy and fresh food. So some people may prefer, it's an American example, Subway restaurants. And whenever you want to meet someone for business but not in office, which coffee house comes to your mind? System business meetings cafe coffee day. So business meetings some people will think of cafe coffee day. That is a nudge. So whenever it is very hot, you feel like drinking something, you reminded of cold drinks. So these nudges are, you can take the freedom of choice, freedom. Nobody compelled you to take nudges, but it's up to you to take or not. Some nudges are positively influenced, some nudges are negatively, some nudges leads negative outcomes. So Richard Thaler got Nobel Prize for the nudge theory in 2017. I will show you some very important pictures of nudges, then you will understand more. This is another theory, that is hyperbolic discounting. It's very important. Hyperbolic discounting is given by psychologist Richard Bernstein. The tendency of individuals to choose smaller soon rewards rather than longer later rewards. You might have heard about A bird in the hand is better than two birds in the bush. So there is a dividend model is there, Walters. So similarly, the people will prefer the immediate rewards rather than the longer later rewards. So this is called hyperbolic discounting. So the people prefer immediate rewards rather than later rewards. So their decisions, their financial and investment decisions based on these type of theories, hyperbolic discounting. And there is a standard finance and behavioral finance difference is there. You can look on the books. Everything it is available in the Google. And the type of investors, there are many type of investors. You can get it. This information also you can get it from the books. Confident investors, anxious investors. It's based on the category or characteristics of the people. The investors in the market can be divided into different categories: confident and anxious investors, deliberate and impetuous investors, organized and sloppy investors, rebellious and conventional investors, different types of investors. So this topic is very important. Biases in the investment process. There are two types of biases: cognitive biases and emotional biases. The picture clearly says that the cognitive biases and emotional bias. One bias is which emerges from the cognitive domain of you, and the other bias will emerge from the emotions. So the difference between cognitive bias and emotional bias: cognitive biases generally involve decision making based on established concepts that may or may not be accurate. So you have had a conceptualization in your mind. So that conceptualization will lead for decision making. So sometimes your conceptualization may be wrong, sometimes your conceptualization may be right. So this is cognitive biases. Then emotional bias means based on our emotions, personal feelings, some kind of decisions which is derived from the emotions. For example, divorces, the reason for divorces which emerge from the emotions. There is no conceptualization on that. So there are something which is emerged from the emotions and something which is emerged from the cognitive. The cognitive reasons and the conceptual reasoning. These are the difference between cognitive bias and emotions. Cognitive bias based on the conceptual reasoning, and emotional bias is based on the emotions. So cognitive biases. I can skip this slide. Type of cognitive biases. First one is confirmation biases. Confirmation biases means just confirms one's own ideas and ignoring the information that opposes them. So there are some people, they are strongly believe their ideology. They won't believe the others people, even though that is right. So, for example, an investor who is holding Reliance Industries share, welcoming all positive news about Reliance Industries, but he may neglect all negative news about Reliance Industries shares. I know people, I know traders, they always like for some shares. They are marrying a particular stock. They love a particular stock. It's better than their wife. So that is the confirmation biases. They won't accept any negative news of that company, even though the company is in a trouble. They won't try to sell that shares. And self-serving biases. The tendency of the people to attribute the positive outcomes as skills and negative outcomes are bad luck. The tendency of the people to attribute the positive outcomes as skills and negative outcomes as bad luck. Suppose you cracked an examination, competitive examination, say that you are my skill, but sometimes you may failed in one examination. You said that the questions were so tough, or there is a manipulation in the examination. That kind of way you may say that. So that is self-serving biases. In a stock market example, we can say that increase of return is due to investment skills, and there is a loss, he assumes that due to bad luck. So this is self-serving biases. And this is a herd mentality, is imitation. There are people who imitate the other investors. So there is a person in the picture called Rakesh Jhunjhunwala. So Rakesh Jhunjhunwala purchased some shares. Soon after his purchase, some person, some investors across the country purchased the same shares. Okay, this is herd mentality. This is very, very dangerous bias. Sometimes Rajesh Jhunjhunwala, sometimes he may get some kind of incentive from the company for purchasing a shares. That is an inside deal. And after that, the people purchase shares without knowing this. So soon after, all people purchase shares and the prices go up. And after that time, the Rajesh Jhunjhunwala will sell the shares and book the profit. This is a herd mentality. I don't want to criticize Rajesh Jhunjhunwala. There are some people, some companies now, mutual funds purchase some shares. Some individuals also follow their mutual fund strategy because mutual funds is managed by professional managers. The negativity biases, many of the negativity bias, you might have seen some people that they may say that the vacancies are very low, very less in government colleges. So why we are putting strain on learning all these things? So this is again negativity biases. You don't bother this. ഞങ്ങളൊക്കെ ടെസ്റ്റ് എഴുതുമ്പോൾ ഇതുപോലെ 4-5 വേക്കൻസി ആയിരുന്നു ബട്ട് അതിനുശേഷം ആ ലിസ്റ്റ് മൊത്തം എടുക്കുന്ന പ്രവണതയാണ് ഉണ്ടാവുന്നത്. സോ ദ വേക്കൻസീസ് വിൽ കം അപ്പ്. സം ടീച്ചേഴ്സ് വിൽ ബി പ്രൊമോട്ടഡ് ആസ് പ്രിൻസിപ്പൽസ്. സോ വി ബി പോസിറ്റീവ് ഓൾവേസ്. In stock market, many investors have missed the bull market rally because of the fear that it will reverse suddenly. So market കൂടിക്കൊണ്ടിരിക്കും ബട്ട് കുറെ ആൾക്കാർ അതിനകത്ത് മാർക്കറ്റ് ബുൾ റാലിയിൽ പാർട്ടിസിപ്പേറ്റ് ചെയ്തില്ല. അവർ വിചാരിക്കും എപ്പോൾ വേണം മാർക്കറ്റ് ഇറങ്ങി പോവാമെന്ന് വിചാരിക്കും. They may feel that the market will down soon. So that is negativity. But the market will not down. Market will cover all kind of resistance. Sometimes the market will go up. So that is negativity biases. We should avoid negativity biases. Then framing biases. Framing biases is very important. How people framing a particular event. So I can read two sentences. Your investments increases by 13% over the course of the year, but loses 3% of that gain due to some year-end market volatility. So suppose an investor increases by 13%, 1 year return 13%, but in the last month he reduced 3% of the gain due to some year and market volatility. The second statement, it is been written as investment increases in value by 13% over the course of the year. Market hit a rough patch near the end of the year, but you are able to hold on to 10% of your gain. Market വളരെ fluctuating ആയി പോയി, വളരെ പ്രശ്നമാണ്, but he can able to make it up, maintain 10%. The people always try to prefer the second sentence rather than the first sentence. This is called framing bias. It's because of the framing effect. How we can, some companies, they usually frame the sentences which positively influences the investors. Some people will be influenced these biases, framing biases. And bandwagon effect. Bandwagon effect is a psychological phenomenon in which people do something primarily because other it, regardless of their own beliefs. Means കുറച്ച് ആൾക്കാർ ബൈ ചെയ്യുന്ന സ്റ്റോക്ക് നമ്മൾ പോയി ബൈ ചെയ്യുക. When there is a bull market rally or Ashmi, at what time I can continue?
So it is scheduled for 2.5 hours from 6:45. From 6:45, it is scheduled for 2.5 hours.
Okay, so I can cut 8:45. 8:45.
Yes, sir. Yes, yes.
Bandwagon effect. Warren Buffett became one of the most successful investors in the world by resisting the bandwagon effect. Warren Buffett is a person who was a trader from the very beginning of his career, and he survived with this bias, bandwagon effect, he did not go with the bandwagon effect. His famous advice is to the investors that to be greedy when others are fearful and fearful when others are greedy. That means കുറെ ആൾക്കാർ ഒരു സൈഡിലോട്ട് പോകുമ്പോൾ അതിന്റെ കൂടെ പോവാതെ മാറി നിൽക്കുക, അവരെല്ലാം ബാക്ക്വേർഡ് ചെയ്യുമ്പോൾ നമ്മൾ ആ ഏരിയയിൽ പോവാന്നാണ് പറയുന്നത്. ബട്ട് ഓൾവേസ് ഐ ഡോണ്ട് നോ ഇറ്റ്സ് ഓൾവേസ് ഇറ്റ്സ് കറക്റ്റ്, but this is also a bias in the behavioral finance, bandwagon effect. And this is a bandwagon effect of Bitcoin prices. In 2018, you know, the Bitcoin got tremendous growth because of the bandwagon effect. Many people have invested in Bitcoin, but after a particular point, the Bitcoin prices were reduced in the mid of 2018. So without any fundamentals, ഒരു ഫണ്ടമെന്റലും ഇല്ലാതെ ആൾക്കാർ ബിറ്റ്കോയിൻ ഇൻവെസ്റ്റ് ചെയ്തുകൊണ്ടിരുന്നു. ബട്ട് ആഫ്റ്റർ എ പർട്ടിക്കുലർ മൊമെന്റ് the Bitcoin prices were reduced. This is a very good example of bandwagon. And it increases by 50% from 2007-8. 2006 in the performance, best example of a bandwagon. Okay, so without any fundamentals, the market was increased. It's anchoring bias or focalism. Its anchoring bias is also called focalism. The people will rely too much on pre-existing information and the first data points they receive when making decisions. So what is the information you had, you strongly believe the information which you had found in the first time. Suppose, for example, if you first see a t-shirt that cost 1,200 and second one that cost 500, and you even believe that the second t-shirt is cheap relative to the anchor. In this case, the anchor first t-shirt price influence your opinion. Even though the second t-shirt is a quality one, you may feel that the second t-shirt is cheap because the price is 500 as compared to seeing that is 1,200. Have invested in stock market. Investing in stock market by I was an investor in 2007, and I before I invest in purchasing in a share, I always look for 52 weeks high price of stock. So I always check the graph of stock, check the graph of growth stock, and find the 52 weeks high price. So this 52 weeks high and 52 week low price are the base for some people's investment. Sometimes this may lead for biases. Then emotional bias, it's because of the emotions I already explained. People are always emotions. Emotions are very important characteristics of human beings. So very important emotional bias, post aversion biases. People may feel more strongly about the pain from the loss than the pleasure from the equal gain. So people may feel more strongly. I don't know it's this emotion to all people, but some people, majority of people, feeling more on strongly on the pains rather than the pleasure. Pleasureനെ കാട്ടിയും പെയിന് കൂടുതൽ വെയിറ്റേജ് കൊടുക്കുന്ന ആൾക്കാരാണ് ഉള്ളത്. It may be due to the psychological disposition of human beings. എല്ലാവരും ആണെന്ന് പറയുന്നില്ല, but the majority people always giving stress to the pains rather than pleasure. Then overconfidence, you know, some people are overconfident when an investor feels that he's superior to others. You know, many people, you might have seen many people, they are overconfident. So I wouldn't say that it is a bias, but confidence is good in sometimes, but sometimes it may have some kind of problems in the stock market. The investment overconfidence is a dangerous thing, but in the life situation, sometimes overconfidence helping people to for successfulness. Then hindsight bias. In simplifying the things, oversimplifications. 2008 financial crisis, some people predicted that 2008 there will be a crisis. But the people in the stock market or people who research in the stock market, they did not take care of that warning. But the market crashes after 2008 crisis, and it is a due to coupling effect across the world, the market were crashed. Simplifying the things is called hindsight bias. This is a major bias in the stock market. Many information we may get in the stock market, but we don't consider it. We may feel that it won't affect us. It won't affect us. So the loss may be the result of this kind of biases. So Robert J. Schiller informed that he said that the overconfidence is maybe the reason for hindsight bias, a tendency to think that one would have known that actual events were coming before they happened. Some people feel that the view of the world is more predictable than really is. I can predict everything. Some people say the overconfidence and hindsight bias are very, very related bias. Then endowment bias is also very important bias. Feeling that we do own is more valuable than what we do not. എൻ്റെ കയ്യിലുള്ള ഷെയർസ് എല്ലാം തന്നെ വളരെ സംഭവമാണെന്ന് ഞാൻ പറഞ്ഞുകൊണ്ടിരിക്കും. So when we discuss with other traders and investors, whatever the portfolios are holding by us are the good portfolios, and our shares are best as compared to your shares. Such kind of attitude is endowment bias. So ഞാൻ ഇൻവെസ്റ്റ് ചെയ്തേക്കുന്നത് ബെറ്റർ ഇൻവെസ്റ്റ്മെന്റ് ആണോ, നീ ഇൻവെസ്റ്റ് ചെയ്തേക്കുന്നത് ബെറ്റർ അല്ല എന്നുള്ളൊരു ഫീലിങ്സ് പല ആൾക്കാർക്കും ഉണ്ടാവും. This is called endowment bias. Even though some kind of error happen in our portfolios, we may not accept that due to this bias, endowment biases. House money effect it was found by Richard Thaler and Eric J. Johnson. House money effect is very simple. നമുക്ക് സ്റ്റോക്ക് മാർക്കറ്റിൽ നിന്ന് റിട്ടേൺ കിട്ടിക്കഴിഞ്ഞാൽ ആ റിട്ടേൺ വെച്ച് നമ്മൾ ഇൻവെസ്റ്റ് ചെയ്യും. ബട്ട് വി ഡു നോട്ട് ടേക്ക് അവർ ഓൺ ക്യാപിറ്റൽ. ഇപ്പൊ എനിക്ക് ഒരു 20,000 rupees സ്റ്റോക്ക് മാർക്കറ്റിൽ നിന്ന് കിട്ടിയെന്ന് വെക്കാം. 20,000, I have got 20,000 rupees. That 20,000 I can invest further, but I do not spend my own capital. So there is a game, a show you might have heard about, Deal or No Deal. So whatever income getting from the game show, again we further invest, but we do not take our own capital. This is called house money effect. The house money effect we left while investing. This is a major bias. Some people may be addicted to this bias. എന്താണോ കിട്ടുന്നത് നമ്മളത് ഇൻവെസ്റ്റ് ചെയ്യും, അല്ല നമ്മുടെ ഓൺ ക്യാപിറ്റൽ കൊണ്ട് നമ്മൾ കളിക്കാതിരിക്കുക. ബട്ട് ഇറ്റ് ഈസ് ഗുഡ് സംടൈംസ്. But people who takes a risk means sometimes we may not be able to position some good investment opportunities when we have this kind of bias. Overreaction is another bias. Overreaction. There is a market crash, or sometimes നമ്മൾ പെട്ടെന്ന് സ്റ്റോക്ക് സെല് ചെയ്യാൻ വേണ്ടി ട്രൈ ചെയ്യുക. Then when there is a problem in your bank, you have heard that some notice or news that your bank is going to collapse. Very next day or the same day itself, you are transferring the entire money to some other bank account. This is called overreaction. So many people are addicted to overreaction bias. So this is overreaction. Bitcoin again. Herding causes overreaction. Overreactions. Another very important bias is procrastination. Procrastination means the act of delaying or postponing something without sufficient reason. I will show the picture of procrastination. So I don't do anything. I feel helpless. I feel guilty. I doubt myself. There are people attitude is procrastination, and they just killing their time. some people, they won't study the PSC examination because they have this kind of bias of procrastination. Why the studies? Because they are lazy. They are lazy to learn things. They may say that I don't know anything. I feel guilty. I doubt myself. So in research also we can find those people are procrastinators. So in the investment also procrastinated. They are lazy. They are not able to take risk. They are not able to even follow some tasks. They are a failure in their life. So this is very important. നമ്മൾ ഇൻവെസ്റ്റ്മെന്റ് ചെയ്യുമ്പോൾ നമ്മൾ വളരെ വളരെ കോൺഷ്യസ് ആയിരിക്കണം. നമ്മൾ വെറുതെ കൊണ്ട് പൈസ ഇട്ടിട്ട് വെറുതെ ഉറങ്ങാൻ പാടില്ല. മീൻസ് നമ്മൾ ഉറങ്ങിക്കഴിഞ്ഞാൽ that will badly affect us. Then the gambler's fallacy or Monte Carlo fallacy. Gambler's fallacy, you know that 5 പ്രാവശ്യം നഷ്ടപ്പെട്ടു, 6ാമത്തെ പ്രാവശ്യം കിട്ടുമെന്നുള്ളൊരു പ്രതീക്ഷ വരും, അപ്പോഴും പോകും. So there are people, I know the lost in 5 scratch of tickets did not win, which means this next one must be a winner. Again, നമ്മൾ കൊണ്ടിടും പോകും. So there are stocks such as gambler's fallacy. Always this kind of character. Stock ഒരിക്കലും മൂവ് ചെയ്യില്ല, but some people invest in those stocks. So this gambler's fallacy. So mental accounting is another bias. Mental accounting means different values people place on money based on subjective criteria that often has detrimental results. You may pay $500 in an expensive restaurant, but you don't pay $200 in a mediocre restaurant. So in an expensive restaurant, you may feel that you are sophisticated. So that is mental accounting. Many people have this kind of mental accounting. നമ്മൾ വലിയ ഹോട്ടലിൽ പോയിട്ട് ടിപ്സ് ഒക്കെ കൊടുക്കുമ്പോൾ ചെറിയ ഹോട്ടലിൽ പോയിട്ട് ആ ടിപ്സിന്റെ പൈസ ആവുള്ളൂ ചെറിയ ഹോട്ടലിൽ പോയി ഫുഡ് കഴിക്കാൻ. So this is mental accounting. So there are a lot of influences of effect of biases. You can learn from the books. Market crashes are the result of biases. So this is an essay. Then investment strategies to avoid bias. So we have techniques of debiasing. So we can use the debiasing techniques with the help of a psychologist. We can reduce the biases, the stages of debiasing processes, how to eliminate our biases. First of all, we need better awareness about our own biases. Then take a decision and analysis, planning, action, follow-up. These are the stages of debiasing processes. And there are the techniques which used by the people to avoid bias. Understanding the market anomalies. Anomalies I already explained. Then avoid market overreactions. The high frequency trading is very important. There are institutions doing this high frequency trading with the help of some algorithms. They are in a second they purchase a huge amount of stocks or huge amount of mutual funds or exchange traded funds, and they can beat like us individual investors. So there is a saying that individual people are losers always in the stock market, but institutions are always winners. In another saying that one person will gain and other person will lose, but the person who gains are very informative, but this kind of institution, they are fundamentally well and they use supercomputers and algorithms to use the trading, and they can beat the market and beat the individual investors. So reduce sunk cost trap effect. So many people have this sunk cost trap effect that can be eliminated or reduced. Sunk cost means the past cost which cannot be recovered. So many people have past cost which cannot be recovered, but people still feeling that I can recover money. But it is a dream only. You cannot recover money. So you should avoid. For example, നിങ്ങൾ ഒരു സ്റ്റോക്ക് ഫുള്ളായിട്ട് നിങ്ങൾക്ക് നഷ്ടപ്പെട്ടു, നിങ്ങൾ 500 രൂപയ്ക്ക് മേടിച്ച ആ സ്റ്റോക്കിന് ഇപ്പോൾ 50 രൂപയാണെങ്കിൽ വെക്കുക. Still you believe that this price will go up. This price will go up. And and you again purchase the shares, average the shares, but this price again go weak. 50 എന്നുള്ള ചിലപ്പോൾ 25 ആവാം 20 ആവാം. So definitely you can avoid the sunk cost trap effect in the market. So behavioral finance means you do smart trades. You should not have emotions, and you have to maintain profitable relationships. Never love something or someone that cannot love you back. The stocks are a financial instrument. The stocks does not have emotions. The stock did not love you back. So you will learn to remove emotion from owning stocks. So nudging, I will means nudging is a policy decision. Nudging, the Richard Thaler got Nobel Prize for nudging theory. I will explain detail. These are the nudges. Add it to cart, buy now. You can click it. So these are the nudges, images of the nudges given by the online trading companies. Nudging. This is another nudge. Who is the best player in the world, Ronaldo or Messi? Is the waste dustbin, and there's a board that who is the best player in the world. So you can put the dust in this bin, to Ronaldo and Messi. So this is again another nudge, nudging passionate football fans to keep streets clean. And the corona hats to nudge people to stay indoor. The corona hats used by the authorities to influence the people to stay in indoor. And this is a very interesting thing. One of the most famous applications of nudge theory, Amsterdam authorities painted a housefly on the urinal, providing users to target it to an aim. This reduced the spillage on bathroom floor by 18%. They painted a housefly, and the effect was tremendous. And the Stockholm city nudging its citizens to use stairs by turning them into keys of piano. 70% of the citizens preferring stairs over the escalator. So the stairs are pianos. Then the people started using stairs rather than escalators. So there's another example. Every step of stairs, there is a burn 1 calorie, 2 calorie. Then the people try to use the stairs rather than lift and escalators. So this really happened even. This is Nudge book written by Thaler and Sunstein, improving decisions about health, wealth, and happiness. The nudge. So nudge is very used in policy decision making. For nudge was increasing the tax compliance in India. So many SMS you will get the tax collected by the government, which is used for the purpose of the public services, so that the people will be influenced by this and pay more taxes. And they do taxes regularly. They do pay taxes regularly. Then reducing dropout rate in poor families. Parents can be informed about the average income gains from spending on or more year in the school for children. To increase savings rate, people can be offered specially designed savings account. The nudges. So many applications in behavioral economics, Beti Patao, Beti Bachao. So many things. Swachha Bharat mission nudges were used, and Beti Bachao, Beti Patao nudges were used. Give it up, LPG subsidy, another nudges used by the government, very intellectually. And then deficient market hypothesis, there are cornering, and you can learn from the books, inefficient markets, circular trading, price tricking, etc. So the last concluding remarks, don't get me wrong, love is a wonderful thing. You can love your spouse, your children, your grandchildren, your home, your work, your country, or even the stock market. You can love the fact that you may have made a lot of money in the stock market, but you should never love a stock. Thank you. Any questions? You can ask.
Thank you, sir. Thank you for your class. If anyone have any questions, please do post it in the chat box.
So we are running short of time. I know that it's 8:50. So already already explained, expected utility theory means we are giving emphasis on the utility, but the prospect theory means the future gains. That is a distinction between the expected utility did not consider the future expected gains. Okay. So you can detail, we'll get it from the books. So I have explained the points only. You can elaborate with the help of good textbook. Prasanna Chandra's books you can use for behavioral finance and investment management. It's a very good book. Case-wise, it has been stated. Dr. S. Kevin's books also good. So hope you have enjoyed the session. I feel that there is no more doubts. Bhagavati?
Yes, sir. I think no more doubts.
Okay.
So it's my duty to render my vote of thanks to Biju sir. And on behalf of the Alumni Association in the Department of Commerce, I thank Biju sir. As the comments on the feedback session comes like it's such a very deep class with lot of information, and as some of them said, it's exactly a classy presentation. I don't think within this much time any teacher could give such a big portion in such a short time. So once again, on behalf of everyone, sir, all the participants and the teachers and everyone, including the Alumni Association, I thank you from the bottom of my heart.
Thank you, Bhagavati, for the good words. Thank you all. We can wind up. Good night and best of luck. Day after tomorrow, one more session from my side. I deals with derivative market and SAPM, stock, security market and portfolio analysis. Okay. Thank you all. Thank you.